Welcome back to the Malaysia Money Matters show. It's the 12th of February, 26.
And today is a real study in contrast. We're seeing companies, squeezing out profits through pure efficiency on one side.
And on the other, the government is just dropping the hammer with these regulatory crackdowns.
Exactly.
Let's start with the corporate earnings. The theme here seems to be cutting costs to save the cash.
It really is. I mean, just look at the brewers.
Right. Heineken Malaysia, their net profit dipped just a little, but then they turn around and declare a 100% dividend payout.
Which is pretty strong.
Yeah.
And then you have Carlsberg Brewery in Malaysia hitting a record high net profit, but they admit it's all down to cost management, not some huge growth in sales. They're proposing a 43-cent final dividend.
So for investors, it's about the yield.
Mm.
These companies are acting like cash cows, really. Just returning value instead of chasing some big, expensive expansion.
It's a classic defensive play in a flat market. You tighten your belt, and it's a similar story in tech.
Oh, CelcomDigi. Their fourth quarter net profit doubled.
But again, you have to ask why. And it's lower costs. They've declared a 3.6-cent dividend.
So that's the merger promise finally, paying off. The integration pain is ending.
Yeah.
And they're finally getting those efficiencies we were all waiting for.
That's right. Now, some sectors are getting a bit of a helping hand from outside forces.
You mean like Dayang Enterprise? Their fourth quarter profit doubled, mostly from Forex gains.
Yeah, that's the volatility bonus. When the currency moves like that, ONG service providers can benefit. It looks great on paper, even if they haven't drilled a single extra well.
And what about Hartalega Holdings? Their share price popped after they beat earnings expectations.
It's a win, sure, but a nuanced one. Analysts are still pretty cautious.
Because of the currency risks.
That and the global oversupply of gloves hasn't just, vanished. It's more of a breather than a full-blown recovery.
Okay, let's pivot to strategy shifts. AirAsia X is shaking things up.
A massive shakeup. They're planning to order small jets, probably the Airbus A220s, and drop their A330neo orders.
So they're moving away from that big planes, long routes idea.
Exactly. It's a shift to smaller planes, more frequency. It lets them target those second-tier cities and actually make a profit doing it.
Interesting. We've also got some IPO buzz. Toontalk established an employee share trust before their listing.
That's a smart move. You lock in your key talent before you go public.
And Teamstar. Their IPO was oversubscribed by 4.2 times.
And that tells you everything you need to know about retail appetite. People are still very keen on the home improvement sector.
There's one delay, though. UEM Agenta requested an extension for the independent advice on their privatization deal.
Which just leaves minority shareholders in limbo. It drags out the uncertainty.
Right. Okay, let's get to the heavy stuff. The government is not playing around. The Competition Appeal Tribunal upheld a massive 367 million ringgit fine.
Against the feed millers cartel, Leong Hup, Dinding's Poultry, FFM, Goldcoin.
That is a huge number.
It's a serious blow. The message from the government is crystal clear. Food security is national security. You don't mess with the price of chicken feed.
And it's not just cartels. A unit of Mayu Global was compounded 24 million ringgit by the police.
For an undisclosed offense, but that sounds like it's under the anti-money laundering laws. A 24 million compound. That's a stark reminder that compliance failure can wipe out your whole year's profit.
And this cleanup is happening in the public sector, too.
We saw MACC Chief Azam Baki admit to owning some Velocity Capital shares, but he was quick to clarify he sold them.
To deny any conflict of interest. Meanwhile, MACC arrested an ex-Malacca chief minister's aide for a 3 million ringgit graft case.
And 6 Selangor local authority officers for licensing bribery. The impact here is about restoring public trust. They're trying to show nobody is off limits.
Speaking of which, the government is actively seeking 7 people linked to 1MDB.
But they're keeping the details quiet. It's a delicate diplomatic dance, but it keeps the pressure on.
Right. Let's do a quick check on the broader economy. Petronas launched the Malaysia Bid Round 2026, offering 15 blocks.
That's all about upstream investment. They're looking for new oil now to guarantee our energy supply 10 years down the line.
And for commodities, palm oil production is expected to slip below 20 million tons.
Which is classic supply and demand. Lower production is a worry, but the tighter supply keeps prices high, which helps the planters' margins.
Let's do a few rapid-fire policy updates. Malaysia and Singapore will finalize border laws for the RTS link by June 30.
That's vital. It ensures that whole connectivity project doesn't get bogged down in red tape.
And the government is cracking down on underperforming cooperatives. No new financing for them.
And the Securities Commission is bringing in a new framework for cash trust schemes.
So it's all about financial discipline.
Across the board. If you can't manage your money, you don't get more of it. Simple as that.
And finally, a couple of court rulings. One on property management. A court ruled mixed developments must have a single joint management body.
But they can charge different rates. That's a practical win. It clarifies a lot for mixed-use buildings.
And the rest. Telem Transform, blocking an EGM, Rafizi Ramli suing NF Corp.
Yeah, that's just more of the boardroom and political drama that keeps the lawyers busy.
What a day. So you have high yields from companies and high fines from the regulators.
It really shows that while the market is proving resilient, the rule of law is definitely tightening.
We encourage you to subscribe to the Malaysia Money Matters podcast to catch every update on the Malaysian market. Thanks for listening. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.